Stick with me. Even if that doesn't happen, I'm taking a 5% number of the total addressable assets or total addressable market. 5% of 900 trillion is $45 trillion. 45 trillion US dollars in today's dollars divided by 21 million Bitcoin. I have spent over 30 years of my career trading bonds as my central focus. Now, I also traded equities. I also traded a ton of derivatives. But basically, the way I come at every single problem is from what they would say a credit lens. Now, people need to understand that credit, which is effectively loans from a bank or bonds issued on behalf of the US Treasury or corporations. I focused on a specific niche within the corporate bond market called junk bonds. So they were, in fact, the riskiest of the corporate bonds. But that being said, all they are is obligations from a borrower. In the case of the US Treasury is borrowing money from all sorts of different lenders around the world. It's an obligation on behalf of the borrower to make payments to the lender on a contractual basis. Why don't we just say where are safer places to put your money in bonds?
Sure.
And for people that haven't gone down the rabbit hole, right now, value stocks, okay, even though the price goes, is exposed to real estate. Even still, real estate's had a crazy good run. Still a better investment. Doesn't mean it can't go down. But in my opinion, on a risk return basis, a better investment than bonds. So hard assets, whether they include growth equities, value equities, growth equities, I think are susceptible to more price corrections. That being said, hard assets. I'm not a gold bug, but I do own gold. Silver. Commodities,
absolutely,
equities, real estate. They're all hard assets that are not contractual returns. Their prices will keep pace generally with the inflation expectations in a system. So then you were going to say, let's talk Bitcoin. Bitcoin is, in my opinion, the best of the hard asset group. So I just threw out a bunch of hard assets to you. I own them all. I own a bunch of real estate. I own a bunch of metals. I own a bunch of commodities. Of course, I own Bitcoin. I own 0 bonds. In fact, a portion of my portfolio, I am borrowing. I'm the reverse of a bondholder. I am taking the cheap money that the bank is willing to lend me and investing in things like levered real estate. Bitcoin is, in my opinion, the best of all those hard assets. But look, I own all those other hard assets too. I'm not 100% in Bitcoin. That's my biggest hard asset exposure is Bitcoin, but it's not 100% of it. You are trying to pass wealth to your children, probably. To the extent that these 70-year-olds have enough money to live on for the rest of their lives, part of it is going to go to be to the heirs of their estate. And in my opinion, you want to conserve the value of the energy that you have put into the world. You want to pass that monetary energy to your children so that they will benefit from all the hard work. Essentially, that's what energy is. Work is energy, as physicists and engineers, which I am. You want to be able to conserve the value of your energy and pass it to your heirs, so that the state isn't stealing the value of your energy from you when you want to pass it to your kids. So a 70-year-old may say, okay, I don't give a shit about that. And then I'd say, okay, I don't give a shit whether you're in Bitcoin or not. But if you do give a shit about that, you have to be in my opinion, the best hard asset that humans have ever created, and that is Bitcoin. Every single market, it doesn't matter whether it's equity markets, credit markets, real estate markets, all these other hard assets I've talked about, is a game of confidence, right? When people are confident in themselves or in the future, they are amassing these assets as a store of wealth to fight the degradation of their purchasing power. But it's always confidence, especially credit, because credit is a really shitty game, okay? As Ricardo Salinas said on stage with me in Miami, in only a way that a beautiful billionaire who's made as much money as he has mostly by being an entrepreneur, says, what's the best thing that you can get in a bond? You get your money back. Coming back to it, it's all about confidence. In any market, it's about the confidence that you are holding something that you will be able to sell if you need to. You will be able to liquidate at a price that will be beneficial compared to the price that you paid for it when you entered into either the contract, which is a bond, or when you entered into the speculative asset, which is non-contractual. It doesn't mean it's more risky. It just means there's no contract to it. An equity share. An equity share of Apple doesn't have a contractual return. You could say, well, they pay a dividend. People, the dividend is non-contractual. They can cancel that dividend at any time, and there's no default repercussions. You try and not pay a coupon on a bond, that's not an option. You are in default of your obligation if you don't pay that thing. Okay, so confidence is the big game. Right now, the confidence of the world is getting a little shattered, not surprisingly, because the people running the global economy are a bunch of drunk drivers, okay? Like, I have never seen less confidence in my entire life in the most important risk chairs of the world. Bitcoin is a journey, and I like to say Bitcoin is an IQ test in risk management. And if you just read the first chapter and listen to people like Peter Schiff and all these conflicted commentators, you'll believe that Bitcoin is a Ponzi. I've researched Bitcoin for over 6 years, hundreds of hours of research. It is very simply the most brilliant technological and financial opportunity I have ever seen. I'm not certain, but I am highly confident that this will solve the fiat Ponzi. What I am certain of is that fiat is a Ponzi. And I am also certain that Warren Buffett and Charlie Munger have a vested interest in that Ponzi continuing, because that's what's made them rich up until this point. Fiat money, which is essentially paper money, where you can print more of it without repercussion, meaning it feels great when you're an ordinary citizen and the government prints money and deposits in your bank account, you feel more rich. It really penalizes you in the long run that they're doing that. And take it to an extreme. If the government can print money, why do people work? Why doesn't the government just print money? And why do people work and pay taxes? So you know that there's intrinsically a problem there. But the biggest fiat Ponzi for me is from the credit side, okay? And it's as simple as this. We have reached a credit level as a percentage of our tax base or gross domestic product that it is impossible for the economy, which is your tax base, to ever grow at a pace that'll even be able to pay the interest on the debt, let alone the principal on the debt. That's what's called the debt spiral. And therefore, the fiat Ponzi can only exist by printing more money. And by printing more money, the value of the money that you hold right now gets debased, like it has over the last 100 years. What happens, though, is it accelerates. And in some cases, because you guys are privileged in the USA, but in some cases, countries print so much money that the money becomes worthless. 100% certain mathematically that the US dollar and all other fiat currencies will continue to debase on an accelerated basis. It's pure credit. And this is why I can say it with 30 years of experience of working in the credit markets. Bitcoin is everything that fiat money is not, okay? It's got fixed supply, 21 million forever and ever. It's decentralized. There's no banker that can be essentially paid off or who can participate in the printing of money and advantage himself and all his cronies by being closer to the money printer. That's why there's a lot of what's called the Cantillon effect.
Yep.
Where the people that benefit the most from printing money are the people that already have all the assets that will at least maintain their value in the context of a debasing currency. Most of the population in the United States and around the world are not privileged like that. They don't have a ton of hard assets. They generally live paycheck to paycheck. They might have $10,000 of savings, most of which is held in a bank account. And that $10,000 of savings is losing purchasing power. So Bitcoin solves all of the problems, okay? It is, and we can go through it, but you guys know what they are, okay? It's scarce, it's transferable, it's portable, it's verifiable, it's everything you want in a store of value. Gold doesn't hit. It's not scarce. It's growing at 2% a year while the price is at its current level. But what if the price of gold was to double? Do you think that the current supply of gold, which is around 2% annually, would stay at 2% annually if gold went from 2,000 to 5,000?
No, they would mine more
Not
of
even
it.
close. They have to, because there's certain reserves in the ground that aren't profitable to mine at $2,000, but for sure they would be profitable to mine at $5,000. Okay, so while the gold supply is relatively low, it's not predictable. Well, Bitcoin is. The halving every 4 years, it's a beautiful thing. It's math and code.
Yeah.
All right, so it's got scarcity, transferability. Okay, everyone say, you can transfer gold. Well, come on, guys, don't lie about that stuff. Portability, same thing. Verifiability. Gosh, how much fool's gold is there out there? How much tungsten? What is the actual gold that's held in Fort Knox? Like, you can't audit this, okay? So Bitcoin is just so much better on so many fronts. And the beautiful thing about Bitcoin is you don't need to be 100% in to participate in the upside that I believe is coming. So if you have 20% of your portfolio, which is a lot, in Bitcoin, and it goes to the price target I think it goes to, 20%, you'll do just fine. Bitcoin has asymmetric upside. I'll say it again. It is the best asymmetric return opportunity I have ever seen in my over 35 years. So I just look at the total addressable market of financial assets in the world, and I say, what portion of those total assets should Bitcoin capture? Okay. So let's start with the facts. These are Institute of International Finance statistics. Total global financial assets in the world, measured in US dollars, are 900 trillion US dollars. That includes all debt, okay? 400 trillion of it. That includes all real estate, 300 trillion. That includes all equities. I mentioned 100 trillion. Right now we're up to $800 trillion. Throw in commodities, throw in fine art, throw in gold, throw in currencies. Easily you get to over 900 trillion US dollars. In today's dollars, this is key, in today's dollars. I think it's not crazy that Bitcoin captures 5%. I think that Bitcoin will become the global reserve asset of the world and supplant US treasuries as that. Because eventually I think that major natural resource exporting nations like Canada, like Russia, like Saudi Arabia will not price their produce in petrodollars. They'll price it in Bitcoin. So stick with me. Even if that doesn't happen, I'm taking a 5% number of the total addressable assets or total addressable market. 5% of 900 trillion is $45 trillion. 45 trillion US dollars in today's dollars divided by 21 million Bitcoin forever and ever is over 2 million US dollars per Bitcoin in today's dollars. Okay, That's at a 5% penetration. I think that's low. What if it's 20%? Well, take my number and multiply it by 4. The market is currently trading at around 40,000 to make my math easy. And that's in today's dollars. And I have a target of 2 million, which means 40,000 divided by 2 million. The market is only giving me a 1 in 50 chance that I'm right. That's 2%.
Yeah.
Now, I'm not 100% certain. I'll just tell you, I'm way more certain than 2%. Now, you guys got to figure out what percent you guys are comfortable with a price target, and then adjust your weighting accordingly. I can only tell you that a 2% chance the market is giving me is way low. And I think I need to buy those odds. Okay. And again, I'm not 100% certain, but I play a probability analysis my whole life. The only wrong answer to your exposure to Bitcoin is a 0% exposure. So therefore, Charlie Munger is wrong. Do your math, hug your kids, pass generational wealth opportunities to your children. Hold on, Sammy, I'm coming. And basically really appreciate the opportunity that Bitcoin has presented us, okay? Bitcoin is hope. It's the most beautiful technological innovation I've ever seen, okay? And you need to understand, these don't come around often. And when you get a guy like Charlie Munger telling you to ignore this opportunity, I think he's giving you horrible advice. What you need to understand is how much above zero should you own? If the answer is 2%, okay, so be it. But the wrong answer is 0.
Absolutely.
Because no one knows for certain. And in my case, I'm going to lay this out. I own 40% of my net worth in Bitcoin. It's not 100, but it's pretty darn substantial.